Jay Powell spoke, employment data, and more. Let's see how the economic data affected the market this week. Okay, so let's talk about the market and how all the economic data affected it this week. First up, let's take a look at the market. Here's how we've been looking at it every weekend. So red line is the S&P 500, purple is the 200-day moving average, and we continue to push higher into all-time high territory. A little bit of digestion here or there, but man, very strong rally. And if you remember from last week, I said, when the back half of February's seasonality really didn't come into any sort of effect, that tells you that you're in a very strong bull trend, and we're clearly seeing more of that. I think it's a little extended, a little long in the tooth. The 200-day moving average is down here, but we'll see how it goes. Still higher for now, but I wouldn't be surprised if this changes soon. More on that later. First up, let's talk about some of the week's biggest stories. Jay Powell was on Capitol Hill, and what did he tell us? He said he's not far from having the confidence to cut interest rates. And this is pretty good. What we're seeing in the economy, we're seeing a slowdown of economic activity, and so we're going to need lower interest rates to start to stimulate the economy as opposed to the high interest rates that we currently have, which are restricting the economy. So I thought this was pretty good for the economy, for markets, for everything, that Jay Powell sort of sees the same things that I'm seeing in the economy, and he seems willing to act. So we'll see how much data they need before they start cutting, but this was good. This is what we wanted to see out of him. Second up, we have the jobs data. And what's amazing is how messy the jobs data is going. So there's a lot of stuff that you can say about this economy. The one thing that you can't have a whole lot of confidence in is what the unemployment is telling you, what new hires is telling you, what jobs is telling you, what the labor force is telling, labor to population ratios. You just can't have confidence in any of that. So January was a blowout in jobs data. They said we got 353,000 jobs. But 1 month later, it was just revised 35% lower to only 229,000 jobs. And what they're telling us today with the report is that February, we added a whole bunch of jobs, another 200,000+ jobs have been added. Yet, if you look at the absolute level of jobs, they did so many revisions on previous months, all these red bars that you can see back here, that technically we have less jobs now, according to the jobs report, than we did 1 month ago. And so what's happening here is this is a survey. They go out and they ask businesses how things are going, and response rates are very low. So what this tells me is the jobs report, any jobs report that you look at, any job statistic that you're looking at, you can't have a high degree of confidence in it because the revisions are so huge and response rates are so low. So we'll see what's going on with the jobs report, but the market is sort of taking it very positively. I'm a little bit more suspect of any of this data. Just don't trust it. Then finally, let's talk about what else. Nvidia, the most important stock in the market. I get asked about Nvidia at least 3 times a week, every week for at least a month or two now. Nvidia is doing something interesting here. If you look at this candle, we have an open. We traded up a whole bunch, then we gave it all back, and then we're coming right back to where we were. And this looks to me like a shooting star. Now, this is technical analysis, so take this with a mountain of salt. But in technical analysis, a shooting star is a transitionary period between an uptrend and a downtrend. And basically, you get a shooting star when the stock is going up, you're in an uptrend, then you open, you have a tremendous amount of like a push in the beginning of the session that moves the stock higher. And then throughout the day, it gets sold all the way down till it finally goes lower for a little bit. And then you sort of end right back to where you are. And if you get this pattern, typically it's pretty good probability that you're going to begin a downtrend shortly thereafter. And I hope this happens. Nvidia is way overcooked here to me. Clients have been asking me about Nvidia incessantly. And unfortunately, I've had to say, this doesn't look like a setup to me. You typically can't buy something when it looks like a vertical line going up. And I think we're starting to see a transition here, at least in the chart. We'll see how it closes today, but this looks like a warning sign, a check engine light for Nvidia. And if we get that, maybe we get this market correction that I'm hoping for, which should take some of this froth out, cool everything off, and make me feel a lot better about our prospects to go higher from here. So we'll see. We're watching Nvidia pretty closely, but there you have it. Economic data is mixed. Jay Powell seems like he's in place to start stimulating the economy. S&P 500 is doing great. I got nothing bad to say there. And we're on the lookout for a trend change here in Nvidia. That's all I got for you. I'll see you next week. Bye.